Welcome back. You're tuned in to Midcap Radar on CNBC-TV18. Let's get to our segment, Midcap Spotlight. Mangalam is joining in, and he's going to be talking about a stock which has rallied 1,000% in the last 5 years. Mangalam?
Well, that's true. Hindustan Foods is on the spotlight, and this is a company that actually needs to be spoken about at length to explain what they basically do. They've acquired Reckitt Benckiser's Healthcare India Khasra manufacturing facility for about 156 odd crores. But the core business of the company is basically to buy non-core manufacturing assets of large players. They manufacture products for large FMCG companies, the likes of HUL, some personal care and F&B products. They also manufacture products for Nykaa, Ferex, Wheat, Hush Puppies, some footwear for Bata as well. They were established in 1988 by the Dempo Group through a JV with Glaxo India. But in 2013, the Dempo Group actually went ahead and sold their stake to Vanity Case Group. And since then, in 2013, they've only acquired manufacturing capabilities, non-core businesses of large FMCG companies. For instance, in FY17, they acquired a small leather division from Hindustan Unilever. In FY19, they started manufacturing detergent, tea and coffee. Also acquired malted beverages capacity in FY20, started home care production and color cosmetics in FY22, which aided them the business of Nykaa. And FY23, they started manufacturing sport shoes as well as ice creams. The stock has been rewarding the shareholders. In the last 1 year, it's up 83%. In the last 3 years, it's up 450%. And in the last 5 years, it's up a whopping 1,050 odd percent. And does it have numbers to match? Yes, in FY19, the revenues were close to around 492 crores. And in FY22, that number quadrupled to over 2,000 crores. In the first half of this year, they've done close to around 1,250 odd crores. Margins have been ranging between 6 to 7 odd percent. And this rise in revenue, because it's a manufacturing company, has been led by the rise in their gross block. So the gross block of the company now stands at around 708 odd crores. And the asset turnover of the company has been usually around 3.5 odd times. The debt on their books is around 400 odd crores. And the growth drivers for them is to continue to expand into new product segments, focus on scaling exports as well. They're integrating backwards with some oleochemicals, etc., which would aid their margins. And talking about margins, they're also entering higher margin businesses like private labels, as well as being the anchor tenant for most of the FMCG companies' manufacturing facilities. Do smart people own it? Yes. Westbridge has around 8.4% stake in the company. Sixth Sense India Opportunities Fund, which is managed by Nikhil Vora, has about 3.7%. And Nikhil Vora's family members in their personal capacity have 2.3% stake in the company as well. But in terms of valuations, extremely expensive, 8,200 crores in terms of market cap. Trailing 12 months net profit is close to around 58 odd crores. But even if you assume that, this profit doubles going forward, it's trading at 66 times. So strong company, good business model, but available at extremely high valuations.
Okay, that was a deep dive into this particular company. Mangalam, thank you so much for bringing that perspective. For the markets, well, there is some more selling pressure that we are seeing right now. 94 points down on the Nifty as we speak. Midcap index 2 is down 460 points at this point in time. And a couple of these stocks which are at the day's low, they include Sun Pharma, SBI Life, Cipla. So some selling pressure on these pharma names. We also have Divi's Labs, which is lower. DRL is the other one, which is lower in trade. So a sharp fall is what we are seeing in these pharma names as we speak. We'll do one thing. We will wrap on this edition of Midcap Radar, your stocks when we return, and we'll keep getting you all the market updates.